No long intro. Volume Imbalance. Now, today's video is a really good one because we'll be breaking down one of the trades I took this week. And I was very happy when I posted the screenshot of the trade. And one of you guys commented I took the same trade. And that really put a smile on my face when I checked my phone and I read that. Not sure why, but I think it's fun and it's good seeing that there are like-minded people like me out there and like yourself, whoever's watching this video. To start off today's mind map, let's actually take a look at what Nassim Nicholas Taleb mentions in his book Anti-Fragile. Of course, one of my favorite books. I do recommend you guys read it. He says, "My idea of the modern Stoic sage is someone who transforms fear into prudence, pain into initiation, and desire into undertaking." Now, this is a very important part because I remember about 10 months ago, almost a year ago, I created a Telegram channel where I would log all my losing trades. And man, it was painful. It was very painful for me to do that, but it needed to be done. And I realized where I was failing. So we won't get into that right now, but it's very important to turn pain into initiation. If you're losing a lot of trades, I know it's scary. I know it feels terrible to actually take a deeper look into where you're messing up. You know, you may be monkeying around, playing around with the markets. You don't want to admit it, but when you go into it and you dissect all the mistakes, that's when you can improve. And the desire to improve is a big undertaking. It's a big thing to do, and it's certainly difficult, but it gets you exactly where you want to go. So, for today's mind map, we'll be looking at the volume imbalance, which is something we talked about earlier on this week on Sunday in the market analysis video. And I mentioned how I would like to see the dollar trade into the volume imbalance. And I was very fearful on whether or not it would. I was hesitant because price already rebalanced it, and one of you guys commented that on the video and why we shouldn't really expect price to trade into it again. But last night during Asia, I was looking at price and seeing it was kind of playing around, looking like it wanted to reach for it. So the minute I saw that, it clicked out. I figured price can still reuse that volume imbalance, even though I wasn't expecting it, but we'll definitely take advantage of it. So when we break this trade down, we'll be stripping it bare to actually see all the components that go into having a really good quality trade like that. And essentially, by knowing the good parts and the things that do work, it helps us to eliminate all the verbiage and the garbage that we don't necessarily need in our trading. So first, let's take a look at price action itself. So we have the London protraction. Of course, most of you guys know it's from 12 a.m. to 2 a.m. where, let's say, if you're bullish, you would expect the markets to trade lower just a little bit in between that time frame. And usually when it does so, in most cases, it will take out sell side liquidity, so it'll be a small sell stop raid. And in today's case, the markets had already taken sell side liquidity as in previous days lows, so even the London protraction wasn't necessarily a big deal for us. So when I saw that, it started to click. Alright, this thing's starting to line up, especially the London protraction. It's a big staple into my trading, especially the model that I'm using for the FTMO accounts. It's a big aspect of it. So the minute I saw it, I journaled it and I was getting ready, made my coffee, everything, and I was locked in. And the next phase into price action was the displacement. And of course, you guys may have noticed I didn't mention bias. Well, the bias has already been determined on Sunday. I'm bullish. I want to see higher prices on the fiber and the cable and lower prices on the dollar. So trade I took was on the fiber, so I was expecting higher prices. And after the protraction, we saw a displacement higher, which usually in most cases is a break in market structure. And that's exactly what we saw. And for me, I use those as entries, and I pulled that from the ICT handbook, from the 2022 YouTube mentorship. So that model where right after the break in market structure, price retrace back into the fair value gap, that's me. I've taken that and I've made it my own in trading forex, and it works really well within the right framework, as you guys will see in the next few minutes. So that's the entry. Once you see the break in market structure, usually it's either by creating a fair value gap or an order block. But in today's case, we had a really good one because it was both. And as you know, the fair value gap inside an order block is one of the most powerful PD arrays out there. One of the more powerful confluences when it comes to having an entry. I personally don't think there are any better entry techniques than the fair value gap coupled with the order block. And of course I say so because I've been using it for a while now, and I've caught some amazing trades with so little drawdown that I don't think anything else could even rival. Maybe there's someone out there with a better entry technique, but it's good. That's very hard to beat. And I could pull so much data to show you guys some of the most insane trades I've taken over the years with specifically the fair value gap and the order block. And of course, price action itself, PD arrays, they don't mean nothing if you don't have the right economic calendar. If the economic calendar, there's no high impact or medium impact news event, you won't really find those big trades that you're usually aiming for. And for me, I'm a one shot, one kill kind of trader, so that's what I aim for. So 50 to 75 pips on each trade. Without any high impact news event, it becomes a bit difficult to pull that off. So let's actually take a look first at the volume imbalance on the dollar. Just really good stuff. And afterwards, we'll actually take a look at some live charts. So here it is. These two purple lines right here are delineating the volume imbalance. So that's the low and that's the high of the volume imbalance. So may I take your attention here. So midnight open. Buy side liquidity here, buy side here. So this is previous day's highs. And from midnight, price trades higher and higher, sweeps buy side, and it does so while trading inside the volume imbalance. And if you guys remember, this volume imbalance here is overlaid on top of a bearish order block on the hourly. I mean, this is insane stuff to have price action line up. There's so many moving parts that align with this setup. I remember I was writing beforehand when I anticipated that this could occur. I wrote how good I felt about this trade and even the trading session. And I credited most of that to having a good night's rest. I went to sleep around 7 last night and woke up at 12. To some people that's not a lot, but to me that's really good sleep. And I felt so good, and I journaled it. And I had to remind myself, even though I feel good doesn't mean I'm going to do good, but win or lose with this trade, I'm glad I took it, and I'm glad I'm looking at the price action. So when I see price trade into here, so right about 2 a.m. in here, it goes a bit higher, nice up close candle, and then for the next 15 minutes it just hammers lower, and it leaves this gap open, this fair value gap. And that's when I realized, all right, this is a done deal. I'm taking this trade. And I've been patient all night, and I figured, all right, this is it. I'm going to bite, and that's the setup. And price played around a little bit and essentially reached back into that fair value gap. And what's important to notice too, if you were to drop into a 4-minute chart, let's say, this low, it would look really good as a bearish breaker. So we have a bearish breaker here on a 4-minute chart. You can still see it here. That's what this is. So it's a fair value gap, but there's a bearish breaker inside that fair value gap. And all that is happening inside a volume imbalance, which is inside a bearish order block. Just insane stuff. And with the time of day and the day of the week, I was telling myself, yeah, this is the high of the day right here. This is the high of the day, and I have an opportunity to capitalize. I haven't had a winning trade in 2 weeks or so. It's been hard for me, and I'm in drawdown. So I figured, man, this is perfect. This is exactly what I need to get my confidence again. And those trades are they're so beautiful to take. Even though I think I got maybe about 4 pips in drawdown, but I figured that's the price to pay. And of course, if we look at the fib here, from the dealer's range, from the high to the low, all the way down lower, I remember. This is the equilibrium. So this is where I was targeting. And of course, markets even went lower. And when I woke up, I went back to bed around 6 just to catch a nap before a New York session. The first thing I did when I woke up, I checked my phone and I saw the markets went way lower. I wanted to punch myself. I was like, I should have held, but I realized I can't afford to be messing around right now. I need to get some wins under my belt. I still have another month with the verification. I was 5% in drawdown. Now we're only 3%, a little bit less than that. It's about 2.7% in drawdown, which is great. I'm getting back to profitability and kind of getting myself out of the hole I dug for myself by messing around over the past month. So this was equilibrium. This was ultimately what I was targeting. Now this is the dollar. I didn't trade on the dollar, but let's actually take a look at this bad boy. This is the one I actually traded. Here it is, midnight open. Trades lower, taking out sell side liquidity. Very, very important. You cannot forget about this part. If you're bullish on a classic buy day, this is essentially what this is. This is power of 3, guys. It may look like it's something else, but this is power of 3. This is open, low, high, and close. That's exactly what this is. So midnight, look, open, low, high, and close. That's literally it. And of course I'm lining it up, putting all this lipstick, but it's as simple as that. We need price to take out sell side liquidity. That's important. And it does so using the London protraction. You see the nice down close candle here, and that was the signal right here. Boom. Breaking market structure up here. Breaking market structure, leaving this fair value gap inside a bullish order block. There's nothing stronger than this. And of course, price trades to the mean threshold. And that's one of the reasons why I posted that 2016 rare ICT order block explanation. This video is blown up. Like, a lot of people will love that video. And it's because in that video I really understood what the order blocks were about. A big bodied candle like this order block, don't expect it to trade up here and then go higher. Never expect that. I think from my understanding over the past few years, 90% of the time, if you have an order block that's that big and the body's so huge, immediately go to the 50%. Just go to the 50%. No questions asked. Don't believe me? Start looking at your charts more carefully. Whenever you have these big, beefy body candles, mean threshold is going to be where price draws into. And knowing that, it's not in your best interest to put your stop loss at mean threshold. It has to be below. So somewhere around here, for me, I put it here. So below equilibrium of the order block. and price trade into it, and man, that thing was a beauty. And I closed the trade here at 25 pips. 25 when I could have had 75, but that's the price I'm willing to take. I just need a couple wins here. I need about two more good trades, and I'll be out of that drawdown and potentially past the verification. I have till January 7th, although I've taken into account, let's see, Christmas, New Year's Eve, so I really have about 2.5 good weeks of decent price action with some news events coming out. I already checked the economic calendar for the next 2 weeks, so I really didn't need to make this work for the next 2 weeks and a half. I should have held, but not really. I was completely happy with closing the trade in here, mainly because I took it on my live account. So it felt like, alright, it's not just a demo trade, it's not just a verification for FTMO type of thing. I made live money with this trade, and let's be happy. Perfect trade. This is one of those 10 out of 10 trades. And for me, it's a shame that I've dug a hole for myself in drawdown where I can't afford to be holding it. But this right here, and see this red line, that's a mean threshold of a bearish order block. And that was my actual target. And this rectangle box here is was a volume imbalance. So up here, if you were to go on an hourly chart, this is a volume imbalance. As you can see, this was all down close candles. It offered no kind of buy side. So I was anticipating the markets to draw back into it. But I really couldn't afford to be holding the trade. Even though my stop was at break even, I just wanted to close the trade and just get my self-confidence back. Just get it back and to actually go back into the markets. Will I see the same thing tomorrow? Probably not. But that's my model. That's my one shot, one kill. That's where I aim for 50 to 75 pips in one trade. And I got it today. I got it, but I couldn't hold on because I've been messing around with the markets. And that's my fault. I understand that. And I've made some changes and I'm okay with it. Now I'm digging myself from the drawdown. It's fun. I've gotten comfortable with being in drawdown because there's nothing I can do about it once I'm in there. So taking really good trade setups and high quality setups, and this was one of them. I mean, absolute beauty. And seeing that someone else caught the trade, and I hope he actually held on to, let's say, buy stops up here. But if not, even having someone who see the markets the same as you, the same time frame, the same period, is just really good thing to see, especially as ICT students, to see that there are others out there. Not sure if he breaks it down like I do, but that fair value gap, really good entry with the order block, and of course, what's most important is understanding price action. Because if you look at this, that order block occurred below these lows, below sell side, and it trades back into it and goes higher. That's what you want. That is external liquidity into internal liquidity. That's my model. When I'm bullish, I want to be selling above the highs, and that's of course why I always want to be buying below midnight open. You will never see me buying above midnight open. Even let's say a trade like this, if price retrace into here, I would never buy in here. If that's midnight, I will never do it. Never, ever. It has to be below midnight. And for some of you, it may be different, but that is my model. Below midnight open, and if I'm selling, it has to be above midnight open. And that's how you catch those power of three, one shot, one kill, big type of trades. I'm not able to capitalize as much as I've wanted, but as I hope you guys can see what I'm working with. I'm not gonna break down my whole model with you guys. It's personal to me, but over time, you guys will see bits and pieces into what my trading model is like, and that's it. And that's it to perfection. There are some other parts I didn't mention, but it's irrelevant right now. this video is mainly about the volume imbalance and seeing how it worked so well. So well. I think the London delayed protraction and volume imbalance has been one of my greatest additions to my arsenal, to my trading arsenal this year. One of the best was the delayed protraction. So today's London protraction was the normal one, but there's a delayed one. I made a video about that. That's one of my best ones this year. Best things I've learned from ICT this year. And then, of course, how to use the volume imbalances. And let's actually take a look here at the trade itself. So $2,500. So exactly 25 pips with a 10 lot. Not a whole lot, but man, gives me hope, gives me courage, energy, and even more drive to keep going, knowing that I still have that much skill. I just need to stop playing around and get out of my own way and be able to capitalize on these trades moving forward. Not sure how many more of these really good one shot, one kills I'll get for the rest of the month, since price action it's been really choppy. Today's price action caught me off guard. I didn't expect to see my one shot, one kill. I thought I was gonna come in, try to scrap and get something, make something happen. But to have my actual model play out in December, yeah, that was a really good thing to see. So hope you guys enjoyed today's video, and let me know if you guys have any questions in regards to the volume imbalance. Still something I'm working with. I'm logging. I even have a separate how do you say it, journal for it, where I log everything in volume imbalance related. It's really good stuff. I think it helps a lot of determining your bias too. So I do hope you guys pay attention to volume imbalances. It's been a great addition for me. So hope you guys enjoyed today's video, and good trading, and see you guys perhaps on Friday if I'm doing a weekly review. If I have another winning trade, I'll probably do a weekly review about those two trades and the loser I had on Monday London session. If not, then we'll probably produce a video on Sunday. So all of those are probablys, so nothing is set in stone. I don't know. I make these videos whenever I actually have something to talk about or feel the need to talk about something. So wish me luck over the next 30 days till January 7th. Have a month to get this verification done. I think I can pull it off. I believe I can pull it off, And when I do, you guys will be the first people I run to, so I can brag about it. With that being said, have a good day and good trading, guys.